Good evening, traders, and welcome to BCR's Evening Market Outlook. Let's take a quick look at the key stories moving the markets as we head into the overnight session. We'll start with the US dollar. The dollar traded relatively flat in today's calm FX environment, with markets largely lacking fresh catalysts. While the greenback did recover some ground on Tuesday after Monday's losses, it's still facing a fairly bearish outlook, both technically and fundamentally. So what's weighing on sentiment right now is uncertainty around US trade policy. Tonight, the Trump administration's new round of steel and aluminium tariffs officially take effect. Historically, these kind of tariffs have had mixed results that may boost US steel jobs, but they often hurt downstream manufacturing and complicate broader trade negotiations. Markets are also still reacting to Trump's ultimatum to trading partners, demanding the improved tariff terms and investment plans by today. So far, there's been little progress reported, and with 5 weeks remaining before reciprocal tariffs kick in, companies are bracing for continued uncertainty. Turning to oil, crude markets remain focused on the balance between supply risks and OPEC production dynamics. This week's wildfires in Alberta, Canada pushed prices higher, but some of the immediate concern has eased with rainfall helping operations resume. One of Canada's major producer, Canadian Natural Resources, has already restarted production at a site that had been shut last week. Still, that relief might not last. The weather forecast for Alberta shows drier, warmer conditions returning, so the wildfire threat still remains. The market is also still digesting OPEC's recent decision to gradually increase production. According to Bloomberg, May output rose by just 200,000 barrels per day, below the original 411,000 barrels per day. Some members like Saudi Arabia have fallen short of their production quotas, while others have already exceeded them. So even though production is technically rising, actual supply growth has still been lower than planned. Looking ahead, OPEC output is expected to keep climbing in June and July, but the market's focus remains firmly on supply disruptions and demand expectations as we head into the peak summer session. Now over to gold. Gold prices struggled to extend Monday's rally and saw some mild pullbacks again today. But fundamentally, the bullish picture hasn't changed. This looks more like a healthy consolidation phase rather than a reversal. In fact, many investors still see this dip as a buying opportunity, especially with gold having already rallied more than 5% off recent lows. The key level that everyone's watching right now is $3,500, a major psychological and technical barrier. A firm break above that could signal a new bullish leg higher. For now, gold is holding above key support around the 50-day EMA and the $3,200 zone. The area is widely seen as a base for further upside, especially in an environment where the dollar is softening and geopolitical tensions persist. That's all from me today for this evening market update. We'll be back tomorrow with the latest updates as markets react to US employment data and more central bank commentary. Until then, trade safe and have a good night.